Guys, how's it going?
How you doing?
Stupendous. Okay, I guess.
Well, there were some promising signs today.
Yeah, right. You know what's funny is usually when you see those kinds of like when it just starts selling and just like keeps going, yes, it's encouraging for sure. But it's something that like you don't really. Oh, what was that?
We've seen it before, though.
We have. That's right. That's what I was going to say. It's a cautionary tale, I guess you could say. It's like don't you can be cautiously optimistic, but don't be optimistically stupid, I guess. I don't know how to put it.
Don't bet the ranch.
That's right. Don't bet the ranch just yet. Yeah. But it's an interesting reaction yesterday when you saw the like the payroll revisions. Like that puts us negative for July. Like that's it's just one of those things where you see this constant, I wouldn't say constant, but like every couple of days you see these like deteriorating metrics across across the different areas of concern for the macro economy. As much as I don't want to see a bear market, those can be painful, especially with hey Will and Neil, how's it going? But they can be very painful, and you never want to see people with their 401ks evaporate. Like that's never a cool thing. No. But yeah, that's just bad for everybody, especially if like some of you guys are like business owners and stuff like that, and you kind of depend on liquidity, right? Just like everybody else. So hopefully you guys are in more durable sectors and things like that. But if you read between the lines, you kind of saw that some of the sector pricing, not sector, like service pricing, what was down with like PPI. I found that a little interesting. I was chatting with Fred Frog off to the side today, and we're just kind of remarking about like the yield spreads and things like that. Just kind of a nerd conversation, but it's still important, right? To kind of get a good pulse on like what's going on and try to kind of distill it down for you guys. So what do you guys have questions about? I was going to cover the VIX and UVIX because that one's been a little painful.
Well, I had a question about that somebody mentioned online about this VXX.
Oh, sure.
And what the difference is between that and UVIX. Okay.
Yeah, good question. I might need to research that one because I'm not really sure off the cuff without looking at the ticker. But yeah, that's a good one. I mean, if anybody knows more about VXX versus like UVIX, feel free to jump in with that. But I can also do I can type some stuff up. Can you guys see my spaz dog in the back? Okay, so VXX, what other questions do you guys have?
Let's do Tesla, if you will.
Oh, no, Tesla? Sure.
Yeah,
I'll definitely cover that. Anything else, guys? Okay, cool. Excuse me. I don't know what the sickness is that I got here, guys, but it's not going away. So if I start to get like a raspy throat and have to clear my throat a whole bunch, I apologize in advance. Getting older, I guess. All right. So let's talk. Oh, you know what? I did want to talk a little bit about spot gamma and some of the options charts. Did all you guys sign up for the Trading Gains platform, like my side thing at all? Because I'm starting to post some option stuff in there.
Yeah, I did.
Okay, cool. And if anybody didn't, send me a DM for the link for it. So basically, there's some like compliance things there with spot gamma. Like they don't want me sharing a bunch of like a bunch of their proprietary things to users stuff, which is understandable, but I still think it adds a tremendous edge. So I'm sharing it in a way like through my platform. It's it's still invite only. So it's not like it's a major public thing. So I think that in this case, we're gonna, probably shouldn't say this on that call, but maybe I'll edit it out. We'll see. But I'm just gonna ask for forgiveness instead of permission in this one, guys, because you know, us loot pirates need to make some sort of loot sometime soon. So, okay. All right. So yeah, send me a DM in Slack or whatever if you want the link for that. There is a very specific link for the pro link. So you guys all, I'll give you guys all access. It all, same description, same thing. I apologize for having to do like two separate places for some of this information, but it's sort of the gymnastics we got to do with copyrights and all sorts of fun business to business, jockeying. Hey, Susan. All right, so let's get rolling here. I don't want to spend like an enormous amount of time on the indexes. I think I'd rather spend some time with like the options stuff, and also like looking at some of the more like individual things, because we all kind of know what's going on with. Sorry, one second. We all kind of know what's going on with. Excuse me again. With the indexes, they're just creeping along, dragging everybody along, and I don't really want to do that. So, I'll be honest, indexes are just kind of pissing me off too. So, pardon my French. All right. So last week we had been talking about this potential here for like a potential reversal. Obviously it just kind of kept grinding away. I'll use the Nasdaq as a proxy. But before we were kind of looking at this, like, hey, if we do get a break or we do get a breach below this this trend line, then and sorry, I don't like to kind of like delete the lines and redraw them, especially if we already talked about a certain scenario, because now you guys can kind of see like what happened once we made the forecast and then what actually happened. So whether you're right or you're wrong, and because a lot of people have confusion, or they have a tough time like identifying tops or like how to hedge a top, that kind of thing. And I think this would be helpful just in general, because you can get fooled a lot, right? So just kind of looking at what we had talked about last week, we were looking at this potential head and shoulders, and we did get like a pin bar kind of thing here, pin bar candle, whatever you want to call it, where it was promising, but we didn't have really like the ton of volume that we were really looking for. We had this 50 DMA test. That was nice, but it kind of seems like I'll just make one note about like distribution. It's I try not to overthink it. So for example, I was talking to my my 5-year-old daughter, and I was just kind of asking her like, let me pull up the 1 minute too. I think this will be helpful. So like Jim Cramer calls it like kid investing or something like that, where he has his kids look at look at a stock or something and say like, what do you think's going to happen with this, or like, what do you think's the next thing to invest or whatever. And but this is sort of similar, where it's like, what color do you see the most of, red or blue? And I know it's very unscientific, but just kind of looking at a pattern like this, and then kind of looking at like the volume distribution, you can kind of figure out whether it's accumulation or distribution. So if you're looking at like, for example, today, where in my opinion, well, now in hindsight, of course, this looks like a wave 2, where you can like the whole day's price action kind of fits a sort of profile here. So when you're seeing this sort of distribution, usually what you see is like the selling in the morning, and then but like they don't keep the foot on the gas, where like you see the selling below certain levels, and also too, like you can kind of see here where we had this 50 DMA trend line test, and then it just kind of bounced right away. Like if you were to see some sort of active market participants trying to push the price down, you'd have seen a lot more volume pushing it past the 50. And if you guys notice, right around the 50, it just bounced up, and then there wasn't like all the selling kind of dried up. But you can still see that, once it did get above the trend line again, you started to see some more of this selling type of pattern, where the bears really have been in control. It's just that they let it like they let it, they'll let the bulls buy it up where they can. And you can see that here where, if they were serious, like this big candle here, I mean, it's putting in a B wave. You can make this sort of assessment, but if you're looking at this sort of thing here, they just did this in an hour, and super high volume, and then as soon as they hit that target, they were done, and then the bull stepped in and they wanted to pass the ball back to them. So think about it like a gentleman's game of tennis, really. But in all fairness, though, when you're reading these patterns, you still want to kind of zoom out and think about, like, okay, is this right? Is this wrong? Like, what's actually going to happen here? Maybe this is pattern expansion, and that's kind of what my my job is here is to try to figure out, like, what are we actually looking at. So after the last couple days, and this is sort of like a proxy for like the S&P as well. The S&P chart looks a little bit different, but for the most part here, we might still continue to grind here a little bit longer. That would be unfortunately lame, because the last couple of days have been pretty pretty dead here. But just doing like a rough estimate for counts, if this is like our final like wave 5 sort of count here, then you would start the count up here. But I still really think it's taken the best shape here. You can make the argument that this is like a longer term wave 4 sort of triangle, where this might be, this whole thing might be like a wave 4, and then we have one final like move up here. And I'll stop there, because sometimes like I don't like to gloss over it. So if it doesn't make sense, please let me know. But it's kind of like a dirty looking structure right now. But triangles and consolidation patterns, ending diagonals, whatever seems to be appearing here, typically those do indicate distribution, especially if they're at the top of a pattern, or if they're kind of like moving along a trend line, or like a straight channel. But if the wave counts are correct, then we can get some sort of 50 DMA trend line test again, and this time they'll probably sell through it, but you'll probably get some sort of knife catching going on there, and then probably like a setup for another run higher. Now, it doesn't necessarily mean that this is correct. You could have what's called an overthrow, which is, so like right now today we hit that 24,000. And conveniently, the S&P also hit that 6550 level that had been, a call wall for quite some time, that we've been calling out. But it doesn't necessarily mean that this is going to happen. I've seen it before where, it seems like it's a foregone conclusion here that we're going to get this, wave 5 up into space, or like a breakout, that kind of thing. And that's usually what the bulls are looking for. But when you do have these major consolidation patterns, sometimes you don't get that. You might even get like a wave 2. So for example, let's just say hits the trend line, and there you go. Just by kind of eyeballing it here, you can kind of see where you might get some alignment. And this is where like once a pattern starts to develop, I start to kind of do the stuff like after hours, where you just do a little bit of experimentation on like what might be good pivot levels. And you can kind of see here that we have like our point of control, that kind of thing, where you might have like an ABC sort of move that does this. So I guess I wanted to mention that because last week we were talking about this head and shoulders pattern, and potentially it would be a reversal, but now the symmetry is kind of coming back together here. So I think that what we're looking at is realistic, but the next step down would be, and this is still kind of what we're looking for here. So I'll change the color to some contrast. But after, so like, again, today we hit this top. It's a psychological top, this 24,000, plus also the, 6550 for the S&P. But once you get this sort of, once you get these sort of tops, right? Or theoretical tops, that kind of thing, then you kind of get these like sell-offs, and then you're really trying to gauge like buyer enthusiasm here, because usually this first drop is going to be like your wave 1 after you hit these like significant levels. But to be fair, I've been fooled before, right? So like you hit the, what do we hit? So like when we're hitting this 23,000 or, 6,400, it's always like the same sort of narrative where it's like, hey, we hit this nice round number, so maybe we're going to pivot now. And it never really, never comes. But if you look at, what's been happening here since really the beginning of August, it's just been a consolidation pattern. It's been distribution. And there's been, like bulls buy it up, sure. The bears are frustrated because they think it's going to keep continuing down, but that's not really how it works. It's like, things move like a glacier on the, longer term time frames. And we always spend a lot of time, like in the day, because you are traders, traders and, market participants. Well, you can get really caught up in this, 1 hour, 2 hour sort of time frame. But when you take a step back, it's, you really want to try to strategize for the longer term. So don't forget that we're in this, we're in a very bearish part of the year from like a seasonality standpoint. And typically in a non-election year, you get some selling. So for example, if we were to take this like peak to trough here, this is nothing. This is peanuts, right? So 3.5%, that kind of thing to test the trend line. Well, if that's a, if that's a wave one and we ended up seeing, let's say like a wave two here crest, then, hey, how about that for free hand, guys? Sorry, laughing at my own jokes again. This is something that I think could be realistic for, let's say, like a wave three and maybe like a higher four, something kind of like this. And we would still we would get confirmation once we see like a wave three sort of thing develop. But again, we still have to have that hard rejection at something like this level, this like 26,700 level. And if we pull up something like the S&P, I was just drawing on this before. But this is what we had last week. And then if we kind of pull up the lines a little bit, we've got some nice, we've got some, it's not quite like a top, but this is kind of what I was saying before, where you might not get that trend line touch, up at the top here, and it might fall just short of it. So the people that take profit orders and, short orders, that kind of thing, like right up at the top of this ending diagonal here, they're probably not going to get that lucky. Like the bulls are going to need to do one of these moves in order for it to truly have a sustainable sort of sustainable kind of run. But at this time, I don't really know if that's going to happen. The Fed is the Fed announcement's getting really close here, and what we're seeing with options is there's a lot of call selling going on at these levels. So really, it's just institutions trying to make some theta burn here, because they're also probably looking at these patterns like, these are starting to wrap up, right? Like they're starting to get a little tired. The participation or broad market participation is kind of down. So in my opinion here, I'm thinking that we may or may not have hit this like interim top today for the different indexes, and then we'll probably see some sort of, well, let's put it this way: if we don't see selling tomorrow or Friday, we'll probably see maybe something like Monday or Tuesday. But bears who are invested, who have all that have all kind of like sold down the market, where you can see a lot of these big heavy red days, they're getting to the point where they're either like running out of inventory because who's really buying up here? Nobody really seems to know. The only buying you should be doing up here is really like hedging your open shorts, that kind of thing, because these longer term patterns have a tendency to flip around. So if we do have some sort of breakout, like I drew on here before, like a hand drawn, this is probably like a false breakout. This 1.382 level is pretty key. Sorry, dog won't leave me alone. It's pretty key here, because if you zoom out, that's where we have been talking about. That's like our theoretical maximum for a sorry, 1 second. For an irregular pattern. So this clear out some of this junk. So if this does happen, this would probably sink a lot of boats here, but it's the psychology of it all. this peak to trough kind of move here back from April, this is sort of like the ultimate end game move, in my opinion. It's like the 66, 50, 66, 60 kind of level, or that sort of zone here is where I think the S&P is probably going to end up. And that might just be, Fed lowers rates and, bulls buy it up just because. It's not a good thing because they're lowering rates, but they're still going to do it anyways. So just, thinking about anticipating that as being a reaction to, or like a market reaction where you would think that, like, for example, yesterday, jobs were revised by a significant amount. And then all of a sudden now we're seeing, we saw, decent buying yesterday, but not strong buying, I guess, if that makes sense. So with these irregular sort of patterns, this is probably what we're going to see. Like just, heading up here to this 1.382. And then that's where you get that trigger where you see this like long-term actual like real sell-off, where, like 4,500 is pretty reasonable for something like that. And if you think about it, it still puts us back, not very far, back to January of 2024. So, if you're thinking about like sideways markets, this is one of those things where you could see a sideways market. But after you do see this sort of thing, because this would be technically like a wave 4 in a longer term. So, we've got these, these longer term sort of wave structures here. But even though we did have like a violation of wave theories, it was just by a little bit. Nasdaq is a little different, but this would still be a pretty strong sort of wave 4, where you would want to take some profits at this level, and then odds are, you could see like another longer term, like 5 wave up, something like this. Just depending on like what the market does. Again, this is not a guarantee. You could see all sorts of patterns that kind of get weird from like a charting perspective. But this is kind of what I'm thinking short term. That going into the back half of the year, well, really like, okay, we already are in the back half of the year, but September, October, like the selling goes fast, right? Like we, in this couple day period, we saw the market drop 22%, in just a couple weeks here. So, that doesn't typically happen a lot, but what we're really looking for is like 5 wave structures, to kind of signal that we are seeing a top. So I want to stop there and make sure that makes sense, because the Nasdaq chart here shows, I think, a better example of what that might be. So like this 5-wave structure here, I think is something that we could see, with just, again, like testing support, because technically this could be a double top. We could see some sort of selling like that, but this would be like a wave 1 in a longer term. So let's say this takes us back, to like the end of October, then we get another bounce that heads up here to where all that buying was, and then you see a much larger drop into, let's say, like next year. Maybe you get this for November, December, where that's bullish, and then January you get the waterfall, and that takes you, pretty much all the way into spring. Yeah, you got a question. Good timing, because I was about ready to stop talking. Go ahead.
Hi, Gaines. Can you hear me?
I sure can.
Yeah. So just a question. So with the Fed meeting and the possible rate cut, do you think an alternative bullish scenario might play out?
It's possible. Yeah. So we could talk about that quick. So yeah, and I don't want to be accused of being too bearish all the time. I hate being a bear. It's lame. Don't make any money. I shouldn't say that. Yeah. So let's talk about an alternative bullish scenario here. Let's use the S&P, because I think this is actually a reasonable sort of scenario. So let's say, we forget all these trend lines or whatever. You could make the argument that you get another like wave 5 that starts here, and you could see something like this back up to like 7,000. This is like my Super Bowl scenario here. So don't freak out, everybody. But so like if you have this, like you would see this start of like a wave 3, I guess you could say. Just to kind of illustrate this, let me try to get a different color. So this, I think, is a pretty, a very bullish sort of scenario. And from like a trend line, not trend line, from a like a counting perspective, this 1.618 extension, that would, I mean, it's pretty close to like the 7,000, but that would signal that this entire thing on the way up is just a, more than half it's a wave 3. But the way that this kind of looks, like you can kind of see how it's kind of cresting a little bit. Like that just, to me, it kind of shows more weakness versus strength. And also too, like, you're starting to see some of the metrics. Like, I know I say this often in my posts and stuff, but like, NVIDIA being 14.7% of US GDP, in a bigger economy than country of Russia. Like, they make computer chips. Yeah, it's AI driven and stuff, but like, these sort of booms and bust cycles don't last for forever. And once everybody gets their computer chips, their AI, platforms and stuff built out, and their investments, paid off and stuff, well, then, who's going to help companies like NVIDIA sustain that revenue? So it's just something I've been thinking about here. But this is still I think it's still a plausible scenario for like a bullish sort of extension. So I think I guess it really comes down to the Fed. So if the Fed cuts, let's say they cut 50 basis points or something, then you could see a pretty strong sort of move up. But if let's say they don't cut and they cite not seeing enough data for inflation or whatever, something like that, then I think the market's gonna make a big pivot and do it quickly, because I mean we can already start to see slowdown in growth with jobs and things like that. But I just think that like this is, I wouldn't say it's I give it like a 30% chance of happening, if that makes sense. I think right now we're seeing a little bit more of that distribution, a little bit more of that active selling that's going on to kind of like keep prices tempered. And you're also seeing that in the options portfolios, like a lot of the call options and things that are on the books. A lot of those look like they're sells. Once you look at some of the bigger order lots, so sold calls, is a bearish sort of is a bearish sort of thing. So if you're just trying to, like, if you're doing a spread, for example, like you sell a whole bunch of calls and you want to buy a whole bunch or whatever, lower, that kind of thing, then it just seems like kind of a bearish accumulation to me. But it's still possible. So I don't want you guys to think that it's all gloom and doom and bear. But hopefully that answered your question and gives you guys a little bit more context on what the upside possibilities are. The one thing I will say about this though is that if this does actually happen, I think that's it for like a decade. Like I think what we're looking at here, folks, I really do believe is like a generational top. This bubble has now more valuation than at least adjusted for inflation and all that other stuff. It has more than 1929 and also 1999 bubbles. So it doesn't matter, like, okay, you can compare it with your Schiller PEs and whatever, but it's still, the market cap valuations is trillions and trillions of dollars. It's amazing. And eventually these things come back to earth. But really, markets really haven't really been pricing in a lot of bad news lately, but eventually it's going to start to matter because corporate profits are going to start to slip if people are losing their jobs. People aren't going to be out there, buying houses. My house is still for sale. You know what I mean? So like, even if things are priced right, that's kind of what a recession does. Is it's like, it just resets things. So it resets expectations. It resets a lot of pricing. And I think that there's like the tailwind that we had with like the AI growth and things like that is, it's not as, I just don't think it's like, it's not like 2022, right? Or 2023, where it was just, nothing but up, AI is going to change everything. Now we're kind of running into those different scenarios where now we have all these fun AI tools, but what are they doing for us? A lot of people aren't really buying into the subscriptions for it. So you're starting to see that on like earnings calls. So corporate accounting, being a prior corporate FP&A finance guy, I can tell you like all the different tricks and stuff that they play with their balance sheets and setting targets for Wall Street, but their internal targets are different, that kind of thing. Like that stuff happens all the time, and you're starting to see revenue growth slowing for companies like NVIDIA. There was a chart I think I posted a couple days ago in the discussion channel, but long story short of it is that I'm trying very hard not to let like bearish bias creep in and be like, well, it's going to be bear because of this, this, and this. Like that's your confirmation bias. But really, I think that the catalyst between whether it's going to be major bull or major bear at the end of the cycle here is going to be really, really kind of dials back to the Fed. So it's a pretty important week next week. So I'll stop there. Questions, comments, concerns, anything that's not clear about like potential bull or potential bear scenarios?
Yeah.
Yeah.
Do you think that a 50 basis point would move it towards this type of scenario that you're drawing?
Yeah, that's a good question. I think it really kind of comes down to if there is like a solid rejection at like this 65-50 level, because there's still a lot of like call gamma that's at these levels here. So when you look at the different the maps, like there's billions and billions of dollars worth of this worth of gamma and this like systemic risk for market makers and people like that at these levels. So I'm kind of thinking that they might try to keep a lid on it. Like if let's say there's a 50 basis point cut, or there's a surprise where let's say there's it's half middle ground 25 points. Then I think probably what you'll see is these guys like keep a lid on it, and then you might see like a slow kind of creep up like this a little bit more. And typically like wave threes are very energetic, but I'm not really getting that energy from the last couple days. I'm getting more of like the distribution kind of vibe, as opposed to like how you can see the difference in price action with something like this, where it's, you don't see a lot of these pullbacks, or like you don't see like a deep pullback, right? So we're starting to see, here we've got these kind of, these just kind of look like distribution sort of patterns, but not to say that you can't see something shoot up like this in a straight line. After you get news like that. So I think probably what you'll see is because of all that gamma that's on the books, it's a significant risk for the market makers. So you'll probably see them try to pin prices. You'll probably see them like actively hedging against it. So that's why, I think we should probably focus more on like some of the options flows, not necessarily zero DTE. That just kind of like controls the day, but more about like longer range setups with options, either like option spreads or the different types of things that kind of that come onto the dealer books here through like the normal normal tape operations. Hopefully that makes sense. Probably not. Did I answer your question at least?
Yes, it does.
Okay, great. Okay, so let's do some of the other things here. I want to talk about Tesla and talk about some of the different options, stuff that's going on. So 10-year really quick. 10-year now has extended lower. I was considering doing like a small buy, like in a TMV sort of thing. But what I'm kind of thinking is going to happen here is I think we'll probably see this move lower to about the 4% mark. You can kind of see that this is like a wave three within a larger sort of thing. So I'm thinking probably what we'll see here is let me blow it up here for you guys. I think we'll see just like one more kind of push down. So we'll see like a resurgence there. And then we'll see this like completion down or to the downside, maybe like this, like I said, like around 4%. And then I think we'll see, like if you look at the you look at this here, you're kind of starting to see more of like a triangle develop, like a just consolidation in general. I still think that even with the rates coming down, it doesn't necessarily mean that it's going to be bearish for rates. If anything, I'm thinking it might be counterintuitive, where you're seeing the reduction in rates right now, but let's say, for example, Fed's been pressured to lower rates. Well, what happens if you start to see CPI, come back with a vengeance, which is possible, right? So if that happens, then I still think you can see a resumption of here. Let me do this for you. Then I think you might see a resumption of what we've been calling for before. I mean, this is probably a little high, but at minimum though, we might see like a new high, like a 5%. We were pretty close to that before, but if you see something like 5, north of 5, getting close to 5.3, that has like serious implications for unrealized losses on balance sheets and things like that. And the government doesn't really have like the repo facilities and things to take care of all those swaps. So it's like, and I might, Yemen and I have been chatting about doing like a dual webinar. And that's one of the things I would like to ask him, for you guys, just like in a sort of a public forum where, if we do start to see like hot CPI again after the Fed cuts, I kind of think about it like a Band-Aid, right? Like you can't or not a Band-Aid, like a haircut. You can always take more off, but you can't put it on. If you put it on, that's bad news. That's negative. That slows things down. So if you have rates where they are right now and you don't change them, then, you can, you'll get beat up over it, but you can at least cite, like Powell's been doing, you cite all your, using all your tools or their tools, who knows? So anyways, so that's kind of what I'm thinking here is that I might take a TMV long here, and it might seem counterintuitive, but it's more of like, I think maybe they're cutting rates because they're getting pressure from jobs reports and things like that. But I still think that inflation's going to be a little bit more sticky and hard to beat. Okay, so taking a look at gold, I think what that's going to do for gold is, just kind of go back here. If we do see this sort of like wave 4 jump here, then gold should take a dive. So I'm thinking that this is like the yield and gold are pretty closely correlated, at least in this cycle right now. So this is kind of what I'm thinking here is that you might see, it had an incredible run. I mean, I really hope you guys were able to accumulate at the 3400s when I was crowing about that for like 2 weeks. Hopefully you guys were able to take advantage of that because that was a monster trade. Too bad we didn't have leverage on that one, but anyway, so this is kind of what I'm thinking is going to happen here with gold. And then typically you get these extensions with these wave 5s in with commodities. So this is probably even a little bit shorter. I do think that it's possible you could see something like an extended wave 5 that'll just surprise everybody. And you could see something like 4,000 if you start to see like CPI getting nuts again here. The same thing with like silver. So silver's making like one of these wave 4 sort of patterns. I think it's probably more like a wave 4 of 3, if that makes sense. And then you probably get like a deeper pullback, and then you get an extension up here. It just seems to fit a little bit more like symmetrically. And again, you guys know I'm a big fan of symmetry with that. And like on the left-hand side here, you can see that like this wave 5 would theoretically extend. So silver and gold, they don't necessarily trade like together. Like if one is far up one day, another, like usually they're not together with that. Like maybe gold's up 0.5% or something, but silver's up 2%, something like that. So there is correlation for sure, but metals in general, I think, are still a good play here if you want to hedge against inflation. Looking at oil sure is taking its sweet time to do whatever it wants to do. I think what's happening here is you're seeing like a small B wave, and what we'll see here, and I'm actually thinking about adding some short hedges just real quick. So if we do see something like this, and then we head back down and test, like let's say the 58 region, something like that, I don't think it'll be there for long. But this is kind of what I'm thinking, because you're starting to see a lot of this, like, sell delta, kind of materialize up at these levels. So probably tomorrow, I think I'm gonna maybe add like a unit or two to the shorts, and then try to hedge up that full long position. Because once this heads back down, then I think that we'll have some more consolidation, and then it should head back up. But I think you'll get a bounce around like the 60 and like the 60s, between the like 60, 67, that kind of thing. Then they head back up and test these moving averages. But yeah, overall, I think that that's probably what's going to happen here with oil. Natural gas, it was a good choice to sell out of that. We didn't get quite the top, but we got top enough, where this one kind of looks like this one's starting to look more like a 5 wave, but you can't really sorry, let me fix this. You can't really do that because it kind of violates the rules, but you can definitely have a series of ABCs. So something like this. Oops. And I won't bore you to death on like terminology or whatever, but but you can see something sort of like this, and that's kind of what I think is going to happen to gas. Just with oil in general, I think those two will kind of fall in tandem. So hopefully, we can pick up some oil at some pretty low prices, because this really does make a really nice bull flag. So hopefully you guys are seeing the same thing I'm seeing here, or descending wedge, whatever. It's still a bullish pattern. All right, so let's talk about so stocks here has been, I wouldn't say frustrating, but it's been just consolidating. Like this entire section up here has been just taking forever. But really what's important to note is that you get all this volume up here. Yeah, got a hand. Go ahead.
Gains, which chart are you showing? Because for me it shows US 500 on my screen.
Oh crap. Oh my God.
Is it same for everyone else, or it's just me?
Oh, you guys, you didn't, come on.
No, I missed it too, because you were talking about oil and natural gas, and I was looking at S&P.
Yeah, I've been putting my charts on while you've been talking on my own screen.
Thank you for saying something. Well, shit. Okay. Okay. Well, to kind of recap, here's the 10-year yield chart I was talking about here. Oh, sorry about that, guys. Thank you for saying something. Would have felt real stupid if it just kept going on. So you got your, just to kind of recap here, because we're kind of running out of time. I'm thinking that you'll see like a wave 4 here for the yield, and then you'll see like a corresponding dip here for gold. And then you also see like probably another run up here with like a large wave 5. But this is, again, like I said, this has been a huge run up. Hopefully you guys were able to capitalize on that. Silver is kind of what the chart looks like now, with like a wave 4 within a 3. And then for oil, this is looking like a decent pivot point for like a ABC down. And for gas, this is what I was talking about here, where you got this more of a complex like C leg down here. But once it gets down to this level, that's where I want to add some oil there. Nothing crazy, like 6 units or whatever, but probably like 2 at least. So for stocks here, this is where you see a lot of this higher volume, like this distribution that's happening around here. You do see a lot of buying, but I think that this is more, I guess, it's kind of, deterministic based on like what's going on with NVIDIA. So let's take a look at Bitcoin here. Bitcoin looks like a bear flag. So this would be another hit for MSTR, but I'll get to that here in a second. NVIDIA, I'm still thinking that this is, kind of putting in a B wave. Can you guys start to see like on the different charts that, things are sort of all cresting at the same time, or they're starting to look like they're, things are about to pivot? That's at least one of those things where I'm trying to take it like on a macro level. So like this chart here for NVIDIA, where you get this B wave, that's where I'm thinking that, probably won't get above this 181 level. It's been sitting up here for quite some time. You can see the volume's been huge. So let's talk about Tesla. This one here is, and this is sort of the same, I guess the thought that I had on here. which is this 358 is like our top. You don't see a ton of volume here, but you do see, if you kind of expand this out, if it's not a channel, you can still make this out in like a triangle, right? And triangles typically happen at like B wave tops. And that's kind of why I'm thinking here that we're seeing like the peak of a wave 2. So that's where I'm thinking that I mean, is it going to go down that far? I don't know. Probably not. Definitely not all at once, but everything else would need to be taken at the same time. So I guess until it's invalidated, that's kind of why I have this 5 wave on here. Any questions, Neil, that you had about Tesla specifically?
No, that I just wanted to make sure to see the chart.
Okay. Yeah. And so you can kind of see here that it hasn't really gotten above this 50, this 352, 360 level. It's been a struggle. So while, yeah, sure, it could inflate up a bit more, I still think that there's been enough of this, accumulation, distribution, sort of like channel here that it should break to the downside. I think at minimum, you could see something like this, where you got that first big sell, and then you get this extension down here to like the 260s. I think that that's probably reasonable, and then you might have like another bounce, that kind of thing. But that's still a little far in the future. Like I'll still leave the 5 waiver on the chart, but again, you're talking about a move that might take 6 months to make. So I don't know if that's quite realistic. At least at this time. I still need, I don't want to keep getting fooled here by patterns that look bearish and then they end up going up to space and then it looks stupid again. I'm trying to reduce the stupidity, so like I try hard for you guys to do the best analysis I can here, but sometimes you're just surprised, one after the other. Okay, so MSTR, how this bear flag might impact MSTR. So I think I mentioned in my post this morning, and maybe it was yesterday, that I'm looking for some sort of sustained bounce. This is not it. So like I do want to add an MSTU hedge, but I think if we can, if we do see something like this where it just grinds down, and then ultimately we get to this bear target 2 with this extension, I think that the SMST position might actually be in the green and be able to close it. I'd like to reduce the position size for that and trade other things for once. So that's kind of the plan with that. I would say, MSTR has been really trading in a lot of these like 50% extension sort of extension. I'm sorry. It's been trading in these like ABCs for like the entire thing. This does look like a 5 wave. But I think in hindsight, it's going to be like, it's just going to be a series of ABCs. And I don't know, I don't want to waste time on it, but it still looks like a corrective B wave. And now we're headed in the C leg down. You can kind of see how the C leg is moving a little bit faster, it's not as, it doesn't bounce around as much as the first wave did. So now you're starting to see that, in my opinion, what looks like a C leg. And to flash back to Bitcoin, this is what looks to me like it's making a B wave top here, and ultimately selling off, or should be selling off after. But I think this is kind of priming itself here for, like the Fed news. So ultimately, I think that you'll see a lot lower prices here for MSTR. 270 would be great, but I think what's probably more realistic is right around like the 300 mark. So the 300 mark is where this bear target 2 is, and that's probably where you'll see some sort of stop, or maybe a little bit before then, like 304. I remember 304 being a fun level. So I am kind of out of time here, but I do have like 1 or 2 minutes here. I think what I'd like to do is I think I'd like to spend some time going through like the spot gamma tool and some of the different charts that I show, but like schedule a separate time for that. Is that something that you guys would attend or feel like would add some value?
Yeah, that would be great.
Okay, because I don't think it's a 10-minute conversation. It's sort of like here we go, a bunch of thumbs up. Great. Okay. Yeah. So let's do that. I don't mind spending the time if you guys don't mind, spending the time, because I do think it's a powerful tool. And I think that, the more and more we learn how to read these things, the better off we're going to be here with picking levels to, go long or short, that kind of thing. It's really just another tool that we can use with, Fibonacci levels and wave counts and things like that, and also volume analysis. So yeah, with that being said, let me pull up one thing here. At least wanted to show you. Oh, yeah. At least wanted to show you guys the levels. Crap. Well, let me stop sharing real quick. I can only spend like 2 minutes on this, then I gotta go. Sorry, I got this mic in my face too. I gotta keep moving around it. All right, here we go. So just oh, come on. I can't click fast enough. That's the problem. Okay, here we go. Okay, so this one, I wanted to show the different levels. So you guys shouldn't be strangers to this. I know it's a little bit difficult to read with the text sometimes overlapping, things like that. But really, how to interpret this is every morning I'll update these. There's not like a specific time. Like I try to do it right around market open, if not maybe like 10, 20 minutes later. But pretty much what this shows here is like what the forward-looking options map is doing, not necessarily the 0 DTE. So I think that's been a point of confusion. So right now, for example, with QQQ, I think that we might see something like this, where we saw the low, then we see like a trend line hit, and then we see like our first sort of revisit back down to this like 577 range. And you can kind of see something similar to that here, but that's kind of like what that means here is that, we got a concentration right around like this 577.65, but these are like longer term concentrations. So you can see pivots here, but one of the tools I think that's more helpful is looking at like the heat maps of 0 DTEs and kind of coming up with like that intraday sort of feel. But yeah, so let's spend some more time on that, I think. So today's Wednesday here. Let's I might be able to do like a Friday, or maybe we could do when does Alex have his webinars? He has like Tuesdays. Thursdays. Okay. So why don't I could do like a double day, like I could do like a Tuesday for the options and then Wednesday of next week for like the the normal updates. Because the Fed announcements, is that Wednesday? I'd have to look at the calendar, but just trying to time it. It might be good for timing to do that Tuesday, Wednesday. What do you guys think? Or sorry, next
Tuesday's fine.
That sounds good.
Okay. Yeah, here we go. Okay, so Wednesday, yeah, we got the interest rate decision. So I think that would be good because then we can use some of that data that we see on Tuesday. We can see what the positioning is for upcoming Wednesday. Okay, cool. Let's do that. All right, so I'll send out another invite for webinar for Tuesday. I'll do like a little type up when I send out the recording later today about what's going on next week. And yeah, so come with questions, and I'll be happy to go through that stuff. All right, guys. Well, thanks a lot for joining today.